Kunj, good morning. Thank you for joining us. When I started my career as a market commentator, I was being told that investing is about buying gold at the price of silver. Now gold is being bought at the price of diamond. Now whether that is right or wrong, I don't know. But if long only sensible money is coming into stocks like DMart, Nestle, or for that matter an HUL, our market's telling you something which we are not understanding because we are optically trained to look at the market from the prism of valuations and PE. But if flows are coming, and these are long only sensible guys, they also understand valuations just like you and me understand. So what are they seeing which you and me can't see?
So in my limited experience of 25 years, somebody told me that's quarter of a century. So I said, wow, I also didn't realize that. But having said that, I have realized, especially in last 10 years, while I hear and see a lot of Indian market gurus, and they obviously quote the global gurus like Warren Buffett and Graham Bell and all, and talk of value investing. But clearly in last 10 years in India, value investing has failed. If I use that word as emphatically as I can, it has failed. And obviously there are reasons for that. The reasons are that one, any quality conscious investors, and in fact this thing has come out more clearly in last 2 years when we had issues starting from ILFS to corporate governance, 3-4 big major business houses, promoters, so to say, failing, and a lot of other issues arising out of the changes that have been happening in the economy, converting the informal economy to formal economy. That whole process has been going on. So a lot of things are coming out. A lot of dirty linens are coming out in public. And that is where the emphasis has come more and more that, okay, give me some quality company, give me some corporate governance oriented promoters, give me some ethical managements. My universe, because of these considerations, within that, if I can have fundamentals which are acceptable in terms of growth, which will be low because the whole economy has not been growing, but at least in terms of cash flow, in terms of return ratios, in terms of working capital management, in terms of future reinvestment of capital, if those could be there, I am not looking at valuation for the time being. And I think that is what is happening in the market. The universe, because of the increasing criteria for investors to reduce their risk, has been shrinking. In the shrinking universe, money has been coming in, sometimes from global, sometimes from domestic. Now, if that is coming in, that is going into the limited number of stocks, and that is where we are seeing that these stocks are continuing to being bought, valuations having been put at a back burner. Of course, some of them are justifying themselves on the financial parameters. Some others are not justifying as much on financial parameters, but on qualitative parameters.
So what are the lessons to be learned from DMart? For those who called it expensive when it went public, it was at 600. Today it stands firmly and strongly at 2400. It's 3x after listing.
Yes.
4x actually. Yes. 4x after listing.
Yes.
It was expensive then and it is expensive now.
Yeah. So some disclosure upfront that only yesterday we have bought it for some of our clients.
Yesterday?
Yes.
Not at 600?
Yes. It's been there for some of them. It has not been there for some of them, because you are right. I also found the valuation expensive.
So why are you finding it cheap?
I am in the market, as I said, with the 25 years of baggage. So you could call it experience. Now I find it baggage, because I also could not tune myself well in time to start looking at these stocks with that kind of expensive valuation that they were trading at. And I had to give in. I had to bow down to the market. I had to bow down to the biggest god. So coming back yesterday, because it was at a correction after rising sharply, 2-3%, 4%, whatever little correction I could get in. So that disclosure up front. Let me also add one or two other retailing stocks to your list of DMart. There's VMart, there is Trent. There are others, a few others also which are doing equally well. Coming to DMart, I think it is very clear. If we look at the financials consistently for last quite a number of quarters, almost since listing, in an economic scenario wherein GDP growth rate has been consistently coming down, now below 5%, this is a company which, and because of the slowdown, there are companies which are reporting 5, 10, barely 10%. In fact, most of them are in single digit growth. This is one of the few companies which is reporting growth in high double digits, in fact 20, 25, 30%. And that is where I think, as I said, the limited amount of money is coming in. Of course, in this stock, we have to keep in mind that the liquidity is low. So despite market cap being high, there are, other than the promoters, non-promoter institutional shareholders who are just holding the stock and not selling it. And that's where, because of the lack of liquidity, also probably there is a little bit of premium that is getting traded for this stock.
Okay, couple of names, other names that have been moving. Kunal, let's get a tech check on some of these. Muthoot Finance, Balakrishna, we've been talking about that one quite a bit. On the charts though, after the kind of move, I mean, yesterday we saw 20% almost in Muthoot.
Yeah, I think I was looking at the data as well, and it was a very encouraging data for especially Muthoot Finance. I think there was a built up of 17% open interest built up. The volumes or the cash volumes, the delivery volumes, of course, when you look at the delivery percentage, it might look at a normal, any other normal day, but then the average traded volumes for that day, generally increases up higher. So the net delivery volumes in terms of value also shoots up. So when you look at such kind of a data, it just about indicates that there's been fresh, set of buyers entering into the stock. And I think after yesterday's move, and yesterday's move was very classical because it was not as if the stock opened 10-15% gap up and they remained at those levels. They opened with a 3.5-4.5% kind of a gap up, and they managed to gain throughout the day. So there was a lot of participation which was there throughout the day for both of these names. So, and I think which is why I believe that these stocks may not go through a sharper retracement or a correction. Yes, there could be periods of some bit of lull in activity or the price remain more sideways. But with yesterday's price patterns on an intraday basis, as well as the delivery and the open interest data, I strongly believe that these stocks should see a further upside, at least to the tune of 5 to 7%. May not be immediate, but I think over the next 1 week, that should be spread across for these stocks.
All right, I'm just going to go back to something which is a evergreen debate, that why HUL is at a record high, why ITC is at a 52-week low. At some point in time, somebody would say there's value to the cigarette business and there is value to the FMCG business of 20,000 crore. That point in time is at 200, 180 or 150.
Yeah, so I'll try to think of an answer to that question by looking at the ITC's price movement or the news flows and other developments over the last 3 years. Was the value at 280? Now I know it wasn't. Was the value at 260? Now I know it wasn't. Was the value at 240? Now I know it wasn't. So there is no answer to that question, number one. Number two, in my view, what has happened after the additional taxation has been put on ITC in this budget, there is a permanent derating of few points, few notches that have been attached to the ITC. Because after GST came in, a clarification came in the mind of market participants that now in the budget, no taxation change negatively or positively can happen to the budget. It is only in GST that can happen. But now with government using its power has done it in budget also. Now, so as a result, market participants are not sure what else can be done to it. And that is where the challenges are coming in. As far as its FMCG and other businesses are considered, I guess those are still in the investment phase. The kind of return that other mature companies are earning on their FMCG business, this company has still not been able to generate that kind of return ratios on its FMCG part of the business. But its valuation continues to be driven by cigarette, which besides the taxation, as we know globally also for the health considerations and for so many other considerations, is continuously coming under pressure. And that is where, at least for me, it has been a no investment call for last quite a few number of years. Despite attractive valuation, I don't mind losing out on its outperformance or on its absolute return if it happens. But since I don't have a clarity, my view will remain that.
Would you buy liquor companies? United Spirits, Radico has done off late very well.
Yeah, so answering from two points of view, not from the ESG or from the liquor, non-liquor, that's not a criteria that I would apply. But I think if I look at the numbers, those are still not coming in. There is a significant amount of slowdown in terms of their sales growth or degrowth or non-growth that is coming in. So no, the valuation, despite the low sales being high and the fact that the whole sector continues to remain under multiple regulatory pressures, mainly by the state governments. So a lot of variables there.
Okay. Pharma saw a bit of a cool off yesterday, Cipla in particular. What do you make of the recent trend that we've been observing in some of these pharma names? Everyone we speak to turns around and says the ones that are focusing on the domestic market, are looking attractive. But we've seen a wider move in pharma this time around. Concerns in the US market seem to be ebbing. Would you agree?
So, pharma has of late kind of got segregated into three different spaces in terms of price movement.
Sure.
One is the large caps. Leave aside Dr. Reddy, which is at a 1-year high, but on a 5-year basis, it is still at a zero return. I'm taking these names just to make my point clear. These are not investment or disinvestment recommendation, and some of them we may or may not be having holding. Sun Pharma on a 5-year basis is still at a negative return. If I remember correctly, about 50% negative return in 5 years, and that's a long time. In a 5 year, if you don't get a positive return, you don't get even flat, you are getting a 50% negative return in a market blue chip stock, then what does one investor do? I think largely similar is the case with Lupin, and somewhere in between there is Cipla.
Okay.
So that's one large cap space.
Sure.
Overall sector has been underperforming for last 3.5 years, but last 1 month, 2 months or so, some of the mid caps have started to do well. In fact, they have come to 52-week high. Again, names to make my case clear: Divi's Laboratory, Natco, Torrent Pharma, some of the, I think Stride Pharma is also there, 2 or 3 more. And some of the MNCs have started to do well. So that is where in terms of share price performance, which of course is being largely led by the financial performance also. The issues on the sector continue in terms of domestic slowdown, in terms of US FDA activism, which probably according to their view is rightly so. The issues of the export challenges, even the market in the US is not growing. And in my view, this is one of the sector which is going to get very severely affected by coronavirus. So I think that's a new
threat,
sword that has started to hang over this sector, and that's where one needs to be clear. Of course, disclosure being there that I've been having some minor exposure in Divi's Lab for quite some time in my personal capacity.
What else do you own in your personal capacity?
He's got a one singular focus this morning. He's been probing you.
We're friends, same village. So it was a village, not just become a town. That's the only difference.
Yeah. So let me start with some underperformers.
The population of a hometown when we lived there was about 3 lakhs.
Oh, wow.
Ajmer.
Wow.
So let me start with some underperformers so that you or the listeners don't think that I'm the smartest man on the street and I have all the good shares. In fact, as I was saying that since I come with the 25 years of baggage, I missed out on a lot of shares because of the valuation consideration that I kept having. So I bought Bajaj Finance in my portfolio much later. Bajaj Finserv much later. Amongst the underperformers, Max Finance is something that I have been holding for quite some time. Although largely I am positive on the insurance space, I have been holding quite a lot of other insurance, life as well as general companies also. So these are some of the holdings. ICICI Bank, City Union Bank are
You're telling me a fund manager's portfolio, not your personal portfolio.
I'm telling my personal. See, okay, another point. Now this is where the problem comes. If I am bullish on some shares in my personal capacity, I have to be bullish on those shares for my investors also.
Yeah.
Maybe liquidity
I
is the
will be
criteria.
doing biggest injustice.
Maybe liquidity is the
I try
criteria.
to follow all the prevalent told guidelines in terms of buying time, selling time, or not buying some shares which I am buying for them and all things like that. But by following all the regulations expected of me as a fund manager, as I said, I'll be doing biggest injustice if I'm buying some X shares in my personal portfolio and not in the client portfolio and vice versa.
I appreciate that. Kunal, what do you own in your personal portfolio?
Well, it's more of a trading portfolio.
That's course. No harm in discussing it.
Yeah, it's more of a trading portfolio, but I look at more of large cap names. I have Jubilant Food, for example. PVR is one of the stocks. McDowell is the latest addition which I have done to my trading portfolio. And then yes, Balkrishna Industries, what I had, I booked major profits over there yesterday.
Kunj is talking about 25 years. CK will say, come to me, I'm 35 years.
Sure, I appreciate.
So CK, 35 years of experience, pour it in. What do you own in your personal portfolio?
He's already smiling, I think.
Oh, is it more than 35? I didn't know this.
Yeah, it's actually about 43 now.
Oh my God.
Wow.
Well, it's kind of evolved over all these few decades that one has been around, and what I've done over, I'll just talk about the recent maybe year or two, where typically since we follow a lot of momentum, it was always focused more on the small cap, mid cap, and in the last about year and a half to two, I've switched to more of growth investing and really given valuation the go by, and that is what has helped me get into stocks like IRCTC and Aflay and Sarthi Industries. I've followed the China tailwind, invested into a lot of chemical companies. So these are the mix of stuff I hold. I don't hold anything, majority I would think I don't hold anything from the old school. My investment portfolio currently is composed, I think, almost completely, or to the extent of, let's say, 75% of stocks which have got listed in the last 2 years.